Happy Friday, everybody. This is Trading.
Not Friday.
Oh, shit. What day is it? Just kidding. Friday was a lot better day than today is, I'll tell you that, man. We are dropping. Hey, this is happy morning, everybody.
Hey, man.
I'm obviously not awake yet. I'm working on it. Anyway, this is Coffee, Trading Bros, Crypto and Coffee.
Sure? You know where you're at right now? You been microdosing this morning or what?
No, man, I'm good. Anyway, maybe a little bit. Anyway, we've been dropping a lot, and we got a lot of interesting things to talk about on the show today. So let's get to it. Are you gonna share your screen?
Yeah. Sorry, man. It's just been a morning.
It's been a Monday morning already.
It has been a Monday morning. Here we go. Look at me. I'm on the 1 minute. Let me go to my daily. Because we always look at the daily. You know why? See that big ass wick right there? And that's why we go to the daily. Because on the daily you get to see this thing happen in freaking real time. And so I gotta figure out how to make all these things stay. All right, so so this is the daily. We've talked, on the USD chart. We've talked about this pattern, that's here, and I'm gonna have to do my homework online, but I'd like to get some of this, clean some of this up. But you know what? Never mind. It's okay. Let's just go ahead.
Give the people what they want.
You see this line right here?
Yes. Where are we going?
That is that's a trend line that came from all the way at the top, and we just extended that line down just like we extend, this. And so this is kind of the range that, I think that we'll play in, only because I think a lot of people have this marked off on their charts as well, not only me. And so I think we'll get some reaction and volatility when we get into those particular areas. So it's 8:30 market just open. We're leading with a pop, which I think is, man, we've been going down so much. I know we got a bunch of shorts and everything else, but we were talking last night on Keaton's Corner. Make sure you check that out. But 1475, I had this line right here. We blew through that last night, so we're gonna get rid of that one.
Oh man, wow!
But my real trend line, not real, but the trend line that is an extension of that lower is down here, and it looks like it's going to be roughly, this is what we were talking about last night, kind of that $1,000 range, as we kind of extend down into that. So I do think we have still a ways to go before we hit support, and I think that's going to fall in line here, and I think there's going to be a lot of buying activity if there's any liquidity left in the market. I mean, we talked about, the EMAs, and of course, this is the setup that we've been talking about, which is just an observation that we've seen on some of the EMAs on lower time frames. Mm-hmm. And so this is right in consistent with what this does. I told you we would kind of get back up. I thought we might have come back up a little bit more. But the fact that we dropped down even further just shows that, one, that the pattern is consistent, and two, that, there's just not a lot of liquidity in the market right now. And so we've had, this hit to the low. We've had another hit to the low, possibly another hit to the low. I mean, this, not to freak anybody out, but this line down here is basically where we were first quarter of 2020 when all this stuff happened. We also have some vectors, shout out to Tino and TradingView, but we've got some vectors here that still need some recovery. And so this is what started everything off with a lot of the stimulus, the COVID, the everything else. And you see this trend line is just a representation of that last little bit of liquidity, or a representation of the last support that we have before this big liquidity march, that's out there. Anyway, getting back to what's happening today,
The Bulls may be coming around the corner right now.
Well,
They might be.
they're going to put the Bulls in the pen. Uh, I mean, this is a natural reaction because we've had so many people that have capitulated and gone short. I mean, we can see that on a lot of the charts, and just market psychology says that people are going to go short when we break a certain range. I think that 1700 was the range that we've broken in. Anybody that thought they could handle that drawdown is probably either barely hanging on or whatever. But that they probably closed those positions, which caused a lot of this capitulation. And now, I think they're starting to get true fear in the market. And with that, I think you'll see some liquidity being taken from some of these shorts that are out there. I mean, you've got these late shorts that have come about, and so they're going to punish folks that have been late. I mean, we've been talking about this short since hell 3000s really, as far as what's been coming. So if you thought you were late, I talked to a lot of people that thought they were late and wanted just to hold the long. They were late on a short at 2500. Now they've probably decided that it's time to short. And I think, unfortunately, it's going to be too late because I think we're going to get a bull trap, which is probably going to be a very explosive, take out those shorts, and probably then lead back to the downside to get down to some of the areas that we talked about. Going to the 14-minute, because I like the 14-minute, it seems like we have somewhat stabilized. We've had this wick to the low, came back, retouched it. We kind of had this move up, didn't really come back to it as well. So, I like the trade here, using this as somewhat of a invalidation area. It came back and got this little wick here, so it would be natural for it to move up after such a move to the downside, especially over the weekend. But we are kind of in that trappy time of the market, so you got to be careful.
And don't forget about False Move Mondays here.
Yeah, no, that's what I'm saying. Just False Move Monday is just a lot of going on. I mean, look at all the red on the charts. I mean, 4.5 billion. We haven't seen that in a while. Excuse me. We haven't seen that in a while. Thank you, sir.
A sneeze? You haven't seen a sneeze in a while?
A sneeze and a congestion and everything else. But look at this. Fucking futures perpetuals down 10%. I mean, the liquidity that's leaving the market, it's incredible. If we look at things like funding rate, we've still got, Binance, and I don't know if you heard, Binance limited withdrawals on Bitcoin this morning. They said there was a glitch in the system, right? Which is not, I mean, everybody's making a big deal out of it. I remember in the stock market, when you had these down days and basically the system just went down, didn't prevented trading. So, it's not like a huge deal, but it is concerning, given it's a newer exchange, not a newer exchange, but just relatively speaking to a stock exchange, it's new. But you got a lot of folks that are FTX and a lot of these guys. But this is perpetuals. We've got to remember that we've got spot that's out there as well that could be driving this move to the downside. But again, I think in this area, you're starting to see online, those that didn't think we'd get here are starting to buy, and then we'll see if that holds. I'm not that confident. I mean, you see my chart. We're talking about the Dow. The Dow is actually down 600 in the future, 660, 700. So this is actually recovery from those lows happening here in the Brinks session. But again, we're still at $120 oil. Energy prices haven't been impacted by anything that the Fed's doing. They're anticipating this week a 0.75 increase versus the 0.5. I think that's a reason the volatility is happening. We got a hot CPI number on Friday that I think most people were expecting, but I guess the market's making the Fed think about what they're doing. But we've got 11 a.m. some inflation expectations. That'll be interesting to see where we're at with that. Let's not even talk about this week. Wednesday's going to be Wednesday's the week that everything's happening. I mean, we can talk about retail sales and all that good. We already know the retail sales are going to be shit. Target, Walmart, all these guys have already come back out and said things were not looking great. It may be in one of the issues. It's an inventory supply chain issue in the beginning that caused probably a lot of over inventory, and then you've got kind of some demand destruction from a consumer standpoint, which I think will continue with some of the consumer credit that's out there in mortgage rates and energy prices. People cutting back on certain things. I think that's going to have an impact on retail markets. But FOMC Wednesday at 2 p.m. should be an exciting time. It's already exciting. We were kind of debating the other day whether or not we'd have a slow week because of the news. Doesn't look like
right?
Because of this Wednesday. Because last time they had, the meeting, the statement, it was a slow week moving all the way up to it. This has started off with a bang, so we'll just have to see how it goes. But that's really what I have on my end. Clutch, let me know. Let's see.
Yeah, man.
I can only imagine high block.
First thing, guys. We do have a CME gap for Friday's close at 1676. Keep that in mind when we're going through this data that we're going to be showing you guys here in just a few minutes with High Block Capital, Bookmap, everything else. So here is High Block Capital. As you can see, so last night on Keaton's Corner, we were in single digits for long liquidations, guys. Let me repeat that, single digits. We were at 11 long liquidations. That was it. Everything was to the upside. As you can see, we are still massively to the upside for short liquidations. We had a maximum of over negative $15.6 billion in short liquidation. That's nuts, dude.
I don't think I've ever seen it this long.
I haven't either. That's what I was just thinking. We're a little bit recovered. I think we're back into 14. Yeah, we're negative 14.8 billion. We do have big liquidations right up here. 1723, which is right above that CME area that I told you about. That's 139 million. We have another one right below it at 1692, which is a little bit closer to that CME gap I was talking about. And then we got stuff down here at 1471. We're definitely due for a pump. Everything's kind of, I realize a lot of people are, just like you mentioned, they're probably going to want to start going short right now because they think this is a really good trappy setup. We're actually going back down here and we are going to be retesting, it looks like, the 1180 range again here on Bookmap. Let me pull this up so get this uploaded so you guys can see it. But Bookmap here, so we've come down, we tested one, had a nice reversal. We've come down, we've tested twice, nice reversal. Dude, we have a cluster of 9,400 orders. At was it 13,000 last night? 13,000.
Yeah, no, they keep moving it down. Yeah.
13,000. We had a cluster of over 16,000 orders in one spot. 16,000 orders. That's a significant amount. And as you can see, we're working our way back down here. We're about to cross 1,200 again, back into this range. And then if we zoom out here, you're going to see, or at least this was pre-New York Open that I'm mentioning here, we don't have any significant orders above us at all. Zero.
I mean, it just smells trap.
Look,
I'm always looking for traps. So I sometimes see them when they're not there. But look,
nothing.
Yeah, I mean the obvious play would be to go short to those particular amounts.
Mm-hmm.
And I think that's going to be the setup. It's just whether or not traders commit to it. That's going to be, and we'll know, like you said, 1180 or getting back to that area. If that liquidity starts to move around or starts to falter, I mean, it's going to be an interesting session. I mean, we talked about it. I mean, today was going to be the open was going to be nice.
You know what's we've been talking about this for months, guys, and how to see it forming out, man. This is This is incredible, and look, I realize
scary. I'm not
it's
like,
incredible and it's scary. Yeah, no
I
doubt.
mean, we talked about this. We talked about it happening this whole time, but to see it actually happening and the predictions happening in the manner that they're happening, right? Like, because what we're really talking about, if we are correct, is getting back to March of 2020,
Yeah.
right? Which is that.
Well,
You know,
here's the
36
deal
months.
though. Here's the deal. Market 2020, we were due for a correction where that
Yeah.
2020 was. So
Right.
so it's not just getting back to that point. It's what was the market going to do, then we continue to see even more downside. So like guys, this goes way bigger than crypto too. This is traditional stock market, the whole 9 yards. I mean, this is people aren't scared yet, but there's a big recession that's already
Well,
in the making.
I think after this move, I mean, we've had a weekend that
Yeah.
basically, we were holding at 1,700 all that time. Everybody was calling support, support, support. Dude, we're $500 less than that.
They
Right?
would-
I mean, these are even in the stock market. I mean, look, the last big capitulation we've had like this in the stock market has been before we were born, right?
Yeah.
And so you think about all the technology and all the algorithms and everything that's been built. They haven't seen anything like this. And to be honest with you, I think, well, I mean, we can talk about it, obviously, with energy prices where they're at and kind of the whole pandemic situation. Not ideal, but it just seems very, this seems like all this was done with purpose.
Right. Yeah.
Not to be, conspiracy theorists
You're a
or to
conspiracy
bash on
theorist?
other country, bash on other countries, but I mean, just seems very, very well laid out as a strategy to really, bring down the U.S. economy just a bit. And so this correction is going to be one that I think, we'll be talking about in the history books.
Oh yeah, for sure, for sure. So guys, I wish we had better news for you, but overall, right now it does look like we're going to the downside. Again, we are expecting a bounce at some point, but where is that bounce? Where is that support? We don't have any. We just see a whole bunch of orders to the downside right now. So I'm not sure
I'll
how
tell
far
you,
that's.
I think we're gonna have to wait till we get out of this Brinks box. I mean, 9:15. We're kind of holding a base. I mean, the false move Monday may be the fact that we recover here, going into Wednesday, and then we dump heading into the end of the week and get down to some of the numbers that we're talking about. But the liquidity to the upside and that's very attractive for somebody. And I think a lot of people have lost hope, and therefore, you're gonna see a big sell-off over the weekend. Generally means, you've got a lot of retail as well that have dumped off. It's not just
What was that? Come in. Hey guys, Cryptomania said he's down at 500, ready to rally the bulls. He's also going to be a guest on the show later, but he's not ready yet.
Okay.
But he said when the prices get right, he's going to show up and lead the bull run up. That's going to be super cool.
I look forward to it.
All right, well, that's all we got today for today's show, guys. We'll see you tomorrow, same time, same place. Be careful with your trades. Again, it's a very trappy day. Everything's leading towards the downside, but we are anticipating that we're going to get some upside momentum soon. But it hasn't shown its face yet. So I would pay attention though to 1180 and 1100 right now on the book map, because that's where the heavy volumes orders are, and that's usually where we're going to see a bounce at. So pay close attention to those areas, and then we're going to see you tomorrow, same time, same place.